And the JSE-listed private schooling group Curro Holdings says that its business model is the reason the company has become resilient in the education space, as it posted yet another strong set of financial performance. The education group, which offers a wide range of affordable private schooling, has reported a 17.3% increase in revenue to 4.1 billion rands. But the company says many account holders are still struggling with the payments since COVID-19. I caught up with the CEO, Cobus Loubser, earlier.
We're pleased with the 35% increase in our recurring headline earnings, and that followed a 17% increase in our revenue and a 17% increase in EBITDA, both of that based on 6% growth in learners. I think as a business, we have gained significant momentum over the last few years in our quest to extend private education to more learners in South Africa. So if you can appreciate that, we've grown from 4,000 learners in 2011 in about 10 or so schools to 73,000 learners at the beginning of this year. So I think we've made a lot of progress in that kind of quest to drive more opportunity for learners in South Africa. Of course, this is a listed business, and we also have to deliver a return to our shareholders. And I think from that perspective, we've got much more to do. The business has achieved a return on capital employed in this year of about 6%, up 1% from last year, but still below our cost of capital. And of course, this is a long cycle operation. It takes about 10 years for a school to mature. So I think, we've come a long way. I think we've made a lot of progress, but we're certainly very dedicated to just driving the success further into the future.
How are parents faring in terms of those tuition fees? Because according to the results today, the enrollments are restrained, although we have seen good growth in learner numbers.
I think there are many factors to this. I think the first thing is that it's a complete fallacy that private school education is isolated from the effects of an economy and the various challenges. So we service many consumers. They're hardworking families who want the best for their kids. And that's the space that we play in at different price points and with different models and different markets and all over South Africa. So we're not isolated from that. And I think there has been real pressure. We know that interest rates and inflation and energy costs and so on has kicked on. So I think what's been very encouraging for us as a business is that despite this trend, really not just over the last year, but the last few years, we've seen growing enrollment. So we are seeing more applications to our schools, which I think underscores a flight to quality. So I think parents are voting with their applications to say they want to participate in the quality education that we offer. Unfortunately, given the pressures in our economy, it does mean that people can't always stay the course, and they may not be able to afford the education. And unfortunately, that's probably the worst thing for us as an organization is to refuse enrollment or to terminate an account when fees are not paid. We cannot deliver a service for free. But certainly our passion and our vision is to extend education, and we're seeing good support in that regard. So slightly higher levers for us in 2022 than in 2021. And I would certainly put that down to financial duress, but also more applications and greater enrollment.
You invested 1.1 billion rand in the business. This year, you plan to invest up to 800 million rand in capital projects to maintain and replace and expand facilities. Tell us more about that.
I think if you, like we do, own nearly 800,000 square meters of property, there's a real obligation on you to paint and to look at waterproofing and to maintain facilities. So I think first and foremost, as a business, maintenance, refurbishment, and replacement. In other words, keeping your estate in good shape. That number in the year 2022 was about 240 million, and there's probably a similar number, slightly higher, maybe 280 million in 2023. Then, if you look at the 800 million, there's about 60 million that's dedicated to acquisitions of land and this new school that we acquired, Courtney College. And then we've also allocated 46 million rand towards what really is an ambition to become more energy independent. So, more kind of investment in solar and battery technology. And then the balance of it, really about 500 million, is then dedicated to the expansion of our facilities, new classrooms, additional equipment, system development, and so on. So the 800 million is substantially orientated to expanding our existing schools with a smattering of one new school and some additional land.
The prospects for 2023, your results in your outlook, you're saying that the suppression of consumers' disposable income is still going to be with us for some time. How do you think that is going to impact on your operations in terms of tuition fees and the like? And I'm saying that because the debtors book had consisted of 137 million rands of actively enrolled accounts and 112 million rands of inactive accounts.
We're starting this year with a relatively healthy customer within our base. I'd like to think that despite the tough economic circumstances, I think we'll stay the course. We expect an improvement in the ratio of bad debt relative to revenue compared to previous years. And I think for us, really, we're very passionate about the 73,000 learners that we do have and their experience on our campuses, the extent to which they can participate in the full range of extracurricular activities and of course, the academic outcomes. So we're really relishing the opportunity to have a really full, successful year with them. And I think as a business, we've gained a lot of experience over the years to manage costs and to match that properly with the activity on our campuses. And so I think from that perspective, we will remain careful and considered in what we do.
That was Cobus Loubser, the Curro Holdings CEO.